The Australian share market went on a rollercoaster ride in the first half of the financial year. The US election result provided the boost it needed, but since the beginning of 2017, the market's been a bit more steady. All up, shares rose 9%. So where to now? Investors over the past year have had to deal with the Brexit fallout, an OPEC production agreement and numerous global and local elections, but none were more important than the US.
Basically, Donald Trump was elected on the premise that he'll be cutting taxes, increasing infrastructure spending. We haven't seen it yet.
Indicating President Trump will continue to sway global shares.
The Aussie market in the last financial year is up about 9%, not bad. But that compares to, say, to US markets that are up about 15, and we've got the Hong Kong market up 24, the German market up 30%.
Also important, what the US Federal Reserve will do with American interest rates.
If the Fed remains relatively gradual and benign, that's probably an environment where global growth continues and share markets continue to rise.
Local interest rates look set to stay low, which is bad news for retirees reliant on fixed income returns.
So I think it's still the focus on the dividend payers, the utilities, the property trusts.
Bottom line is, yes, the Aussie economy keeps growing, but it's relatively constrained growth. And therefore profits grow, but at a relatively constrained rate. Share market goes up, but not dramatically.
Analysts say the real opportunity is overseas amid signs global growth is picking up.
So whether it's investing directly or investing via Australian companies that have a good proportion of their businesses in overseas markets and economies.
If you want to see good returns, you've probably got to have a decent exposure to global shares, particularly Eurozone shares, Japanese shares, emerging market. That's where I think the growth will be.
And a reminder about the superannuation changes which will come into effect on Saturday. The before-tax contributions cap will fall to $25,000 regardless of your age. The after-tax cap from $180,000 to $100,000. And the bring forward rule, which allows you to combine 3 years of caps in a single year, will also decline. Quickly to the Australian share market now, which rose as the iron ore price continues to climb. That helped the miners. The banks did well. Retailers fell. The Australian dollar is trading at a 3-month high against the US. And that is the day in finance.